What debt ceiling crisis? We got the Fed. What's up, everybody? Welcome aboard to Bubba's Bottom Line for Sunday, the 5th of February. And of course, a week away from the Super Bowl. And we all know that the debt ceiling crisis is a phony bunch of bullshit, that they'll pass a new budget and raise the debt ceiling once again. I mean, when you have the Federal Reserve, a supposed private corporation involved, and you've now effectively cost or stolen another $7,400 per American taxpayer over your 2.5 years or whatever it happens to be. What do you end up with? You end up with nothing, with a mess. Okay, you end up with ridiculous inflation. And of course, one thing we do know for sure is that if you had let the free markets trade, okay, you would not have CPI prints in the stratosphere and in Pluto. And in fact, if you were working from a demand side of economy instead of a supply side, you would have inflation only based on demand of buying a product or of using or borrowing money or whatever it happens to be. You would not have this ridiculous man-made inflation, which is the same thing as taxation without representation. Okay? I mean, if you go back in history and you look, you can see the difference of when you're allowing the free market to work and when you're using manipulation and man-made crises to pump up taxes and pump up everything else to take away the American taxpayer dollars. Okay, they're going to hike the debt ceiling. This president doesn't have the balls to shut it down, and in fact, he's enjoying spending your money. Okay, again, it's not their money. Government doesn't make money. Government makes debt. Government makes stupid laws, and they make bills that are so complicated that each one includes a bunch of side deals for all the people that were involved in that particular bill. This has not changed. Okay, in history, this has not changed. It's only getting worse. And of course, when you now have administration that wants to really destroy the middle class, you can see the acceleration. Okay, so no need to worry about the debt ceiling. We have inflation that is ridiculous and would not be if we let the free markets trade. Okay, that would determine what prices were, and it would be that simple. And of course, we see from Friday, we had a massive jobs number that beat by about 3 times. It was 185 was expected. The number came in at about 514. And of course, the backstory as President Biden was out there chirping about what he's done for this economy, okay, what he didn't say to you is that most of those jobs are part-time. Most of those jobs don't include benefits. Most of those jobs are people that have to work more than one job just to make ends meet. Okay? But let's continue to applaud the bullshit that we get to see here and the story and the spinning of the tail, which is all garbage. Okay? You saw Apple, Amazon, Google, all miss big on earnings. And those are on reduced earnings, okay? Those are on reduced expectations. Now, Meta did happen to explode higher off of their earnings this week. And of course, it's not a total surprise based on how much selling has been. Remember, markets, big sell-offs sometimes turn into short squeezes, and short squeezes become powerful. And you tie that in with the Wednesday Fed meeting, and whether or not, it's really hard to know whether or not the Fed was talking hawkish or dovish. Okay? It's very interesting because it's kind of said one way, and then it's kind of said another way. So it's hard to really grasp, but certainly the trading world, the investing world, took it as dovish that the Fed is getting closer to the end of hiking and may get back into reducing interest rates shortly. Well, I can tell you this, that that's not going to happen, okay? And the only way that it happens is if the banks fail once again and they come to the Americans for money once again, and that will happen eventually. But I don't think that's happening here. And as we've talked about here before, I think that the Federal Reserve is dead set on getting these interest rates up to about 6% on the 10-year notes, okay? And we're seeing, again, earnings and numbers can be very deceiving because, of course, it's not the number, it's how they're reported and what perspective they're reported. So when you bring expectations down, it's a lot easier to beat. But the dovish announcement and the way that the Two-Face, Jerome Powell, if you remember Seinfeld, Two-Face, okay, if you watch and listen to what he said, and actually for the first time in months, I listened just to see, because I wanted to hear what kind of bullshit he would be spewing. And of course, it was almost impossible to comprehend where they really stand. And I think that the bottom line is very simple. Okay, they're going to continue to do their thing to continue to stick it to the American middle class. Okay, that is this target of 2% inflation. We've never had inflation at these types of levels like this under when it was under our control. And of course, again, you go back to whether you're dealing with supply side or demand side. And of course, if you're bailing out shit, and why would we bail out businesses that are going out of business? I have no idea. Okay, makes no sense. Okay, you're not good enough. You're not strong enough to stay in business. You go out of business. You don't deserve to be in business. You certainly don't deserve to be bailed out. Okay, but if we were in a true free market, inflation would be virtually zero. It would be based on, potentially cost of goods and services rising, which would also rise at the retail level, but it wouldn't be at the same pace that it is now because we would have a free market of competition allowing prices to work. And again, I remind you that when we look at the interest rate, which is one of the markets that should be totally free, okay, that you can see that the value of money and people borrowing, people are probably willing to pay a lot more to begin with. And they have done all the way through because not everybody was entitled to that very low interest rate. Okay. So it's hard to say whether they're dovish or hawkish, the Fed, but it looks like they're going to go another 25 basis points. And this is the largest increase in a 12-month period in history. This is also a Federal Reserve that is raising into a recession, which they keep denying that we actually do have a recession. But I think one of the bigger stories of the week was the spy balloon on Friday. And there's either one or two now. I think one going over like the Puerto Rico area and one going over the United States. Okay, a Chinese spy balloon that is still in the air. Okay, now I don't know about you, but to me that senses of reeks of either some collusion between us and them, or weakness on our side. Why would you let a Chinese spy balloon wander, okay, through the United States of America? Okay, it doesn't make a lot of sense if you think about it. Okay, you're allowing your number one enemy, the number one threat in the world to your way of life, and you're letting them spy on you with spy balloon or balloons. We're not sure quite yet what it's going to be, but we continue to hear the same old garbage rhetoric, and of course through it all we continue to give money to Ukraine. Why? I have no idea. Russia continues to prosper, although the rhetoric being dealt out by this administration says no. Jobs are plentiful, except that nobody can afford to eat. Okay, and we've got some sort of suppression on farm prices for who's ever doing that or however they're doing it. It is ridiculous because, of course, that's going to come to roost when you finally realize that you are short on food and you haven't planted enough because you priced out many of the smaller farmers. As our boy Bill Gates continues to accumulate farmland, which is just another way of saying that he who controls the food supply controls the world. Okay, so we have so many issues to deal with throughout these recent crises, okay, and there is no sign that they're going to get better. But the number one thing that you should really look at is A, the debt ceiling, and B, compared to what you have to spend, and C, that knowing that we would not have this ridiculous inflation if government would quit stealing our freedom and allow the free markets to continue to trade. That is really the crux of the matter, is that the government does not allow the markets to be free. There is way too much manipulation by the Federal Reserve and the fraudulent fiat currency system known as paper currency, paper money. This is Bubba's Bottom Line. It is Sunday, the 5th of February. We're going to step out of here for a break, and we'll be right back with our market commentary after the break. What's up, kids? Well, as you know, I talk about a couple of our sponsors each and every week. And each and every week I tell you that I've got many brokers of my own, but the two brokers that I prefer, number one, Capital Trading Group for futures and commodities, and they do our letter of direction trading. They are moderately priced in between. Okay, they're not overly priced, they're not underpriced, they're not the cheapest, they're not the most expensive. They're right in the sweet spot. Okay, and I think one thing you have to remember is also their customer service is second to none. They answer the phone when you call. They handle all my accounts, all my money, and they're also our partner on Day Trader's Dream. But that's info.capitaltradinggroup.com/Bubba, and you can see it scrolling on the side. And of course, Trade Your Brokerage, $10 a month flat brokerage, saves me over $100,000 a year in commissions. We have the ability to auto trade with them. Okay, for our equity members at no cost, and of course our equities hit new highs after new highs this year so far. But why would we want to, if you have the ability to auto trade at no charge, why wouldn't you take advantage of it? But that's up to you. If you want to hedge automation, you have to license from us, but Trader is no effect. It's $10 a month no matter what you do with them. So think about it. Try.tradier.com/Bubba. And again, they're also scrolling the side. And of course, our high school program, that this is going to be our last year to try to make this work. Unfortunately, in the woke America, teachers don't want to teach something that would actually educate students and take them away from being morons. They want to keep them stupid. And that's kind of how they teach now, to keep them stupid. Okay, and it is a sad state of affairs when we don't want to educate our children to have an opinion, to say something. Okay, but in the meantime, certainly, if you'd like to help us out, you can go to patreon.com/Bubba Trading, and of course, all that information is either on the side or the bottom. Now let's get back to Bubba's Bottom Line, and of course, our market report. It's time now to go back to Bubba's Bottom Line. Welcome back. It is Bubba's Bottom Line. It is Sunday, February the 5th, and of course, we're a week away from the Super Bowl, and got lots of props for you that we'll start giving you some out later today. But in the meantime, markets, well, the equities are all higher. Okay, some stronger than others. We're off to a very, very big start. I have a bet that I'm losing at the moment that I made with somebody that the market would be up to 10%. I said, no way. We'll see. I'll still take the under, even though we're over now. Again, I've seen this movie before. I don't know how it ends for sure, but basically, and the picture that I'm watching cannot be good. Okay, but in the meantime, last week the markets were higher for the week. Okay, last week you saw the big push up on Wednesday, and of course on Thursday, until the big sell off on Friday. Okay, but overall markets were higher for the week. So again, you You can't fight that, nor would you want to. Again, listen, remember, markets are absolute, they're always right. So we don't know right or wrong what the story is. We just know that they're either up or down, and our portfolios are affected in such a way. In the meantime, the dollar index, which we no longer trade, but it was higher for the week, not dramatically, just slightly higher on the week, making the euro currency slightly lower for the week. Now, if we were trading dollars still, we would be still short, and we are still long euro currency, which got pulverized on Friday. But again, that's part of markets that go straight up. And of course, the Bitcoin is now steadily holding over 23,000. We do own it in our portfolios, and we'll continue to be long it, okay, until the signal changes. Bonds and notes, look, they got crippled on Friday, and for the week they were about flat. But if you look at a weekly chart, you'll see that it looks like they have peaked. And I think that, again, if I am correct on interest rates, then the notes and bonds are going dramatically lower, which I do, even though we're long, I do believe that to be the case. And of course, in the precious metals, gold and silver got schmottered, and platinum on Friday. Okay, again, what was it? I mean, was it the stronger dollar? Again, you know how I talk about correlations and talk about what garbage that is. Is it the new policy? Was it the jobs? I think it was just a natural sell-off. I think gold probably went up a little bit too fast, and of course, you get these much bigger, much faster active moves when they reverse for a short period of time. But we are still long gold. We are still long silver. Copper is slightly lower for the week, but it's still over $4. And of course, we are long it. Again, I don't understand why it's even higher, so it's hard for me to comprehend and tell you why I'm long it. But in the meantime, we are okay. In the grain markets, they continue to be in a malaise. They continue to be stuck. They continue to have no volume, which is consistent with the rest of almost all markets. Very little interest in markets today. Okay, but in the meanwhile, okay, they are all kind of mixed. I'd be a buyer of all of them. We personally are long corn, long beans, short wheat. In the meats, which we no longer trade, but cattle, fats and feeders are higher and still going. I think they've reached probably close to the upper end. They may not go down, and I don't think they're going down. Hogs, I think, which we would be short, but if you're looking for a spot play, I think buying hogs is probably a pretty good play for a spot play. Okay, in the oil market, crude got crushed on Friday. I'm surprised we're still long, but we are for now. But I think that it's probably going lower here. I do think that at some point this year it may hit an all-time new high because, again, of course, our great energy policies from our great president, okay, and his fan club, okay, and of course natural gas continues to get pulverized down at about 240 right now, and we're still short. In the softs, cocoa is kind of flattish. We're still long. Sugar was down. We're short. OJ got exploded higher again, which makes no sense, but we're still long, so it's okay. Coffee kind of mixed. We were still long last week, and cotton is just still stuck and going sideways. So the markets themselves, look, there's a lack of liquidity, there's a lack of volume, there's a lack of interest. So it makes it much tougher. Okay. So again, as I say every day when I'm doing Bubba's Daily Update, just be careful. Okay. This is not the time to be aggressive to markets. All right, we're going to step out here for our final break, and we'll be back with, of course, my commentary and a little bit of information on prop betting in the Super Bowl. This is Bubba's Bottom Line for Sunday, February the 5th. Well, kids, again, you know our sponsors, right? Capital Trading Group, and again, their information's on the side. Capital Trading Group, Trader Brokerage, and of course our high school program. Check them out. Look, I vetted everything for you. It's not something, it's something that I use myself that I think is very valuable to you in understanding the best things for you in the marketplace. So, in the meantime, check them out, and we're going to get back to Bubba's Bottom Line and my commentary right now. Welcome back. It is Bubba's Bottom Line. It is Sunday, the 5th of February, and I don't know. I tell you, I'm 65 years old. I've been around for a while, a day or two, and I've seen a lot, but I've never seen as much violence and hatred and racism in this country as we see today. And no better example than what's going on in Memphis, where you have a African American man or black man that was murdered by 5 cops who also happen to be black, but yet they're blaming it on white racism. Okay? Now, if you could explain that to me, I would really appreciate it, because it makes no sense that when you have 5 black police officers, or African American, whichever is politically correct, that killed 1, okay, and they're all from the same race, where's the racism? Okay, were they ordered to do so? You know, again, this is where the logic and the nonsense take over. Okay, the same as that they now want to take down a statue of Abraham Lincoln. Okay, so isn't it ridiculous that we have this amount of hatred and this amount of fighting? Of course, maybe we can blame President Trump for all this. I mean, President Biden is still blaming Trump for the high inflation, which was nowhere near it was. But again, think about it. Have you ever seen this type of violence and this type of racism in this country within the last, 25 years? I have not. But again, I could be wrong. In the meantime, next Sunday is Super Bowl Sunday, and if you're a player and you'd like to prop market, okay, know that if you're going to play the unders and most of the props, that you probably want to wait. But if you're looking to play some of the overs, the sooner you take them, the sooner the better off you are, because the public will naturally push markets higher, because the public typically is a favorite bettor and an over player. Okay, and we do have 3 props open now, and that is Kansas City to score 12.5 points, over 12.5 points in the first half. Patrick Mahomes over 290 yards passing, okay, and Jalen Hurts under 245 yards passing. In the meantime, have a great weekend, everybody. As always, we'll see you back here tomorrow with Bubba's Daily Update, and remember to take care of yourself and not to be overly aggressive to these markets. It can only cause you grief and pain until we see some business return. Have a great week, everybody. We'll see you later. Bubba's Bottom Line, Sunday, February the 5th.